So rates have risen.
They have.
Since last year.
Yeah.
So where are we with the current interest rates?
Okay, so this is a very complex question, and I can't tell you how many times I have a buyer call me and say, hey, I just got this letter in the mail, or somebody called me and they are offering me this incredible interest rate. You know, what is your interest rate? I want to be the first person to tell you right now, most of that is a marketing scam. Most of it is a marketing scam, and I'll tell you why. Rates are within a range day to day. Everybody falls within this rates of, this range of what are the market interest rates. But the truth is, 10 people could call me for the same exact purchase price of a house, the same exact house, and I could give them 10 different interest rates. And here's the reason why. Interest rates are based completely on borrower risk. What does that mean? What that means is if somebody's quoting you an interest rate and they haven't pulled your credit score and they haven't seen your borrowing history and your liabilities, I mean, to put it bluntly, they're completely full of crap. And I'll tell you why. When we pull your credit score, we get a series of numbers. And like it or hate it, I think credit can be silly sometimes, really, when we're looking at the overall picture. But these banks that assign, these interest rates that are assigned to you are based off of the score you get. The better your credit score, the better borrower they assume you are, and they assign you a lower interest rate. This is really important because lower interest rates mean lower payments. So essentially you're getting rewarded for having better credit. So an individual's credit score is going to determine the interest rate that they have available. So I always like to preface that because when people ask, well, what are the interest rates today? It depends. What's your borrowing history? What's your credit score? And I would just really caution borrowers that are watching this, clients that are people that are interested in the home buying process. There's going to be a lot of lenders that will send you interest rates and they'll say, this is what I can do. They'll send it to you on a piece of paper. Unless it is written, unless there's an APR included, and unless they've done your credit pull, chances are that's not the interest rate you're going to end up with at the closing table. And I just really want to make that clear because I've seen buyers heartbroken at the end of the transaction when the interest rate that they actually received was higher than they expected. It puts them outside of the budget of what they wanted to pay for housing. They went through this whole process. It's just heartbreaking, and I just want people to be aware of that. So anytime you're sent a rate, really dig in and ask these questions. How are you guaranteeing this rate? Did you pull my credit score? And be cautious. You don't want everybody pulling the credit score. But today, the last time I checked, interest rates today were about 6.94%. They change day to day. In fact, they change multiple times a day. Right as I was walking in here, my phone alerted me that if I had any clients in escrow, we need to lock right now because there's volatility in the market and they think there's going to be an adjustment by the afternoon. So interest rates change every single day, multiple times a day.
Wow. So let's say as a buyer, you've pulled my credit and pulled my history and I qualified for a 6.9%.
Yeah.
So like if I want to buy down that interest rate, how does that work?
Yeah. So we're in a really cool market cycle right now. I think we're in such an exciting market time for new buyers, especially first-time buyers, because there's so much opportunity. We're seeing sellers offer these things called concessions, seller credits. And we can take these seller credits and apply them to different things. You could pay off your mortgage insurance, you can cover your closing costs, but in a high interest rate environment, you can also apply it to these magical little tools called interest rate buydowns or temporary buydowns. When you talk about interest rate buydowns, there's two categories. There's a permanent buydown and there's a temporary buydown. Temporary buydowns work in stages. You can have a 3-2-1 buydown, a 2-1 buydown. What it means is if an interest rate today is 6%, a 2-1 buydown would mean for the next 3 years, at the first year of your mortgage payment, if the rates today are 6%, you're going to subtract 2. For a 2-1 buydown, subtract 2. So we'd start at 4%. Next year, we'd bump up to 5%. And the third year, we would go all the way up to what we call the mature note rate of 6%. That's what the market rate was at when we locked your interest rate. Now, there are rules around these. There's a max allowable amount that a seller can contribute to the mortgage to buy these rates down. These interest rate buy downs take a really solid team. It takes a rock star realtor who is in alignment with the mortgage advisor, with the lender, because you and I have to have a conversation as you're submitting offers, because you need dollar amounts for how much to ask for in concessions. And the way to do that is through a calculation. I have a software tool that a calculator I built. And if you were to send me the list price of this property, I could plug that list price and plug in some information into this calculator, and I can give you the exact dollar amount. Why that's important is, could you imagine if we submitted an offer for a 2-1 buy down? It's the only way that this buyer is gonna afford this mortgage for the next 2 years. That number that you asked for is actually shorter than what we actually need because the lender made a mistake. You guys go to close escrow, we don't have enough credit to cover the buy down, and there's a rule that says the buyer can't contribute to this buy down. We're in big trouble.
Right.
We just ruined this buyer's day. So it takes a rock star team that's communicating together. Now, you could have a 3-2-1 buy down, which if it's at 6 today, it starts at 3, and then it goes to 4 and 5 and 6. Here's my advice for using these tools. Make sure that the mortgage advisor you're using understands the max contribution limits per loan. Make sure that your agent is a rock star and understands that they're going to write this in the contract. And you have to also understand when in the market cycle you should use this. There's so many strategies when making offers in real estate. You really need to time. Look, if we have a light socket in the wall that's got a loose screw, we're not going to take our hammer out of the toolbox and bash the screw into the wall. Each tool has a specific use, and we have to apply the use of that tool with our knowledge of historical data and where we are in the market cycle.
So even with the FHA guidelines, we're still a little bit short. What type of payment assistance programs are there?
Yeah, so there are a plethora. That's a really good word right there.
Yes.
There's a plethora of down payment assistance programs, first-time homebuyer programs. There's programs for teachers and nurses and first responders and everyday Washingtonians that just need a little bit of assistance getting into a home. These programs are incredible. And if it is the only option you have to get into a home, I think that we should take that opportunity and run with it. I help clients all the time with these first-time or down payment assistance programs. I do think it's important to highlight, though, if you don't truly need the program, it's not your best deal. And I'll tell you why. They oftentimes tell you where you're allowed to buy your home. They make it so you're unable to shop for your interest rate, which means they just tell you what the interest rate is. So there's no way I can go shop you an interest rate. When I'm originating a loan, what I do is I go compare it to tons of banks, and I find you the best terms and the best interest rate. The first-time homebuyer programs, down payment assistance programs, they say, here's what your interest rate is. Here's the area that you're allowed to buy in. And they have really strict requirements, like you can't make a certain amount of money. And sometimes they make you give back the down payment assistance. So they make you give back the assistance if you're not living in the home or you move. And it can be an expense that you're not expecting. Life moves. And if you all of a sudden have to get up and leave, you could be in a situation where you have to repay this amount of money. And I always encourage people to try to find a solution, whether from friends or family, for gift funds, to go outside, because oftentimes they're more expensive, these down payment assistance programs. But all that being said, they're an incredible tool, and if there truly are no options, we're gonna leverage that opportunity and we're gonna make a plan together just like every other product, and we're gonna find a long-term solution to make sure that you're taken care of and you can refinance at a later date into a lower rate, or maybe move into an area that you wanna move into. But if that's the only option, I think let's go for it. They're incredible tools to use.
Okay, so I've purchased my home at 7%, and now we're a couple years later and rates have dropped down to 5 or 4.5. What does it look like to refinance?
Yeah, it's really easy. We have all your information, obviously. We work together, we have a relationship. Interest rates are lower, and we wanna give you a lower monthly payment. You just call us up, same thing, we'll have a 15-minute phone call, You might submit your most recent mortgage statement. You might send me your most recent pay stub so I can just make sure that you're still employed and making money. And it really is as simple as, let's look for an interest rate for you. What term do you want? How long do you want the loan to be? And we go through the process. It's really simple and easy. And oftentimes, if I originate the loan, I can do your refinance at a zero cost for you.
Whoa,
Yeah.
that's huge.
It is huge. So we'll waive all the funding fees and all that in-house. If I originated the original mortgage, I'll do the refi at no cost. Yeah.
Whoa. Yeah.
Yeah.
That's amazing.
It is amazing, yeah.
Yeah, that's huge.
Yeah.
Okay.